Hey guys, welcome back. Now we are going to solve one problem from consignment. This is a merge of normal as well as abnormal loss. And one of the crucial problems that we have to get a grip of these problems. If these questions are asked in examinations, we should solve it we should be in a position to solve these problems. Okay, so let's quickly read the question. There is a single trader, okay, who consigned goods to M Limited, okay, cost at rupees 32, consigned 5000 liters, okay, on first date is not required. Okay, so S Limited paid, S Limited means single trader, paid rupees 5000 for freight and insurance. Okay, during transit 200 liters were damaged, 200 liters were destroyed. Okay, 200 liters destroyed. This is abnormal loss. Okay, and insurance company paid the claim, which is rupees 5000. Okay, and then M Limited has paid rupees 6100 as clear charges, and then del credit and then rent and things are there. Rent rupees 300, and then salary rupees 900. Okay, and commission is 6% plus 4%. Okay, 4% is del credit. So whatever the bad debts incurred in the consignment, that has to be borne by the M Limited itself. Okay, that's for that Singa is providing the 4% extra commission to M Limited. Okay, so 4% del credit. Then what informations are given on 36? Okay, after the entire goods have been stored in godown, there was some evaporation happens because that's oil. So due to that, there is a loss of 100 liters. Loss of 100 liters. This is normal loss. See, this is abnormal. This is normal. Okay, due to evaporation. And customer who bought, and M Limited sold 4000 liters at rupees 1,65,000. Okay, and a customer who bought oil for 1500 could pay only 40% of his settlement. Is not our problem. That's a problem of M Limited. M Limited paid entire amount to Singa Limited by check. Okay, after bank. Okay, bank paid. That's it. What they've asked is consignment account in the books of Singa traders. Okay, these are all the scenario which has been asked. Normal loss is 100 liters, and abnormal loss is 200 liters. Okay, in the books of Singa traders. So we have to prepare the consignment account, right? So consignment account. But so okay, let's fill the informations quickly for consignment account. How much goods have been consigned, which is goods sent on consignment. Goods sent on consignment is 5000 liters into 32, which is 1,60,000. How much is the freight paid? Freight paid by the consignor is rupees 5000, which has been since it is in the books of Singa Trader, so whatever paid by the consignor should be treated as bank account only. Okay, then there is abnormal loss. Okay, there is abnormal loss happened during transit. Abnormal loss account For that we need a working note. Okay, we'll put working note. And what else happen? M Limited paid for the charges, which is M Limited is M Limited. Okay, what are all charges paid by M Limited? 6,100 plus 300 plus 900. So 7,300 has been paid by M Limited. What's the sale happened during the period which has been showed by the M Limited? So M Limited account debit to consignment. So how much has been sold? 4,000 liters into price is not even direct price itself, it has been given. Okay, 1,65,000 is the total sales amount. Okay, then there is a closing stock. Right, we need closing stock also, which is consignment stock. That also, to find out the consignment stock, we need a working note. Okay, what else information is given? And there is a commission. See, there is a commission. Commission is 10%. Totally 6% plus 4% is 10%. 1,65,000 into 10%, which is, wait, there is 1,65,000. Yes, 1,65,000 only the sales amount. So 1,65,000 into 10% is 16,500 is the commission. Commission, we should not name it as commission. This is M Limited. We are transferring the commission to M Limited. So we should not create multiple accounts in the consignment books, consignment account, because there is a dealing with the M Limited and M Limited and consigning and consigner. So whatever the what are the things related to consignee, we should treat it as consignee only. Whatever the things that has been spent by us, that we can treat it, that spent by the consignor, that can be treated as bank or goods and consignment. We can treat it like that. Okay, closing stock of consignment, closing stock of consignee is consignment stock. We have to show that. Okay, right. Commission we have put. Then that's it. We have to find out the P&L, which is the balancing figure. Right. So what are all the missing figures? These things only not given in the question that we have to find out now. Okay, there is a table we need to prepare now, which is working note, calculation of abnormal loss and closing stock, particulars, liters, rupees. Okay, right. Okay, how much goods have been consigned? Cost of goods consigned, 5,000 liters have been consigned. Price is at rupees 32. So 5,000 into 32, which is 1,60,000 is the consigned good value. Right. Then what are all the expenses incurred by the consignor, which is rupees 5,000. Okay, 1,65,000 for the total cost of the total cost of the goods is 1,65,000 for 5,000 liters. Okay, then we need to, there is a loss happen, no abnormal loss. Goods destroyed in transit. Okay, how much goods has been destroyed in transit, which is 200 units. Okay, they said that destroyed goods is 200 liters. Okay, 200 liters. What the cost of 200 liters? Cross multiply. So 1,65,000 into 200 divisible by 5,000, which is 6,600. Right, remove that, we'll get 1,58,400 value for 4,800 units. Then add back the consignee expenses also incurred for the products. What's the consignee expenses? Considerable, non-recurring. Non-recurring consignment expenses only should be included. Okay, which is clearing charges only, the non-recurring. So 6,100 we have to include. Okay, 4,800 liters and included with 6,100. The value of the total cost of 4,800 liters is 1,64,500. Then that is the normal loss. Normal loss we have to charge only from the customers only. Abnormal loss we can bear. Abnormal loss is our loss, but normal loss is customer's loss. Okay, that we can't bear. Our loss is abnormal loss, normal loss is customer's loss, right? Okay, 100 units, deduct that, we'll get 4,700 and then 1,64,500 as the value. Okay, what's the sales liters is 4,000 liters, balance 700, which is the actual closing stock which is unsold. Okay, so if 4,700 is 1,64,000, what for 700? Cross multiply 164,500 into 700 divisible by 4,700, which is 24,500 is the value of closing stock. Okay, so 24,500 value of closing stock entered. Then what's the abnormal loss value, which is 6,600. Okay, 6,600. When we calculate the balance sheet figure, we get the value which is 5,000, 1,60,000 plus 5,000 plus 7,300 plus 1,500 minus plus 164. Which is 7,300 is the P&L, right? So this is the major table we have to get a grip out of this problem. When we are getting these questions in exams, we can make mistakes in this table. So memorize this table. What's the process we are making? What's the process we are doing is, first first goods has been sent by the consignor, and for the sent goods, consignor has incurred expenses. Okay, that expenses should be the cost of the total products, but in between that goods were destroyed in transit. So the destroyed value we have found with the total cost. Okay, then there is expenses incurred by the consignee, but that expenses only for 4,800 units. So 4,800 units costed rupees 1,64,500. From that there is a normal loss. Normal loss is not our loss. Normal loss is the customer's loss. So remove that, we'll get the actual value of the actual liters of 1,64,500. So 4,700 liters is the value for 1,64,500. Okay, calculate that, we'll get the closing stock which is 700. So when we cross multiply, we get the value of rupees 24,500 as closing stock, right? So we found the closing stock also, consignment stock, which is, so that's it. The problem is, we'll get the any other similar kind of unique problems. If I come across, I'll definitely post. Thank you.